Do you ever feel stuck in the rat race? Life doesn't have to be that way if you're willing to put in the work. In Bigger Vision, Chris Garrison helps you discover the keys to abundance, freedom, and personal growth that let you live the life of your dreams. And now, here's your host, Chris Garrison.
Welcome, everybody. You've made it to the Bigger Vision podcast. This is Chris Garrison, your host, and I am so glad that you guys have decided to tune in today because we've got a lot to talk about. And it's got a lot to pull from the last event I was just at in Nashville, Tim Brought's mastermind called Legacy Family. Over 200 entrepreneurs, investors that show up in the room, all different levels, from just leaving their job, aspiring to leave their job to become self-employed, multifamily, thousands of doors, down to looking to acquire their first rental. And what makes these rooms so fantastic is the fact that you can come in and help someone up and at the same time be helped up. Because every problem is the same. It's just depending on what level you're at. We all run into the same roadblocks. And so when you can sit there and speed up time by getting humble for a moment and saying, putting your ego aside and saying, hey, here is what my problem is. And I feel like if I got this taken care of, that I would be able to shoot past and have exponential growth. And you sit there and explain what you're needing, and then someone in that room is going to say, hey, man, this is what I did when I was in that position. And here's how I executed it. And then light bulbs come off. And most of the time, you even know the answers. You just need some clarity because you're stuck in the weeds of the everyday events. I don't care if you have a business or if you're a W-2 employee, it doesn't matter. We get stuck in our daily activities, and it's hard for us to pull away, to lift up our perspective, and to see a higher level viewpoint. When you're in the middle, think about right now, it's October, fall, Halloween, corn mazes are out. Think about when you're in that corn maze. All you can see is the corn stalks. You're moving through that maze in hopes that you are making the correct turns. But if you were able to elevate yourself, let's say that you had a 16-foot ladder that you could stand up on in the middle of that maze or set up at any point when you needed to know what turn to make, and you would be able to see the outline of the maze, you would know exactly what turns to make. This is what a mastermind does. This is why it's so important to pull yourself away and go to an event like this, because clarity is brought with new perspective. And when you get new perspective, growth is going to happen, because now you can see it at a different viewpoint, and you're not so limited anymore to your own viewpoint inside of your own maze. So I labeled this podcast Growing or Preserving, because I believe that there's two phases in investing, two phases in wealth building, in building the legacy wealth. And right now I'm in the growing phase, but I sat at a table the second day at this event with someone that was in preservation phase. And it doesn't mean that they're not growing, but growing phase, I have found, if I look at my life and the way that I have been in the last several years, I put it all on the line. I put the farm on the line, as they would say. I've burned all the ships behind me, and I take massive risk. Now, it is mitigated risk because I make sure that I look up and educate myself so that I'm not going to do a stupid move that's uneducated. And I also make sure that I surround myself around people that have already walked the path, and I ask questions. I'm not scared to be the dumbest person in the room. And that can be very intimidating at times, but you have to push yourself out of your comfort zone. When I decide that something is great and it's going to really propel me towards my goals, and I get that anxiety feel for a moment, that little shake on the inside, I automatically know that this is the path I'm supposed to go. And the way I get rid of that shake on the inside is to gather information, to gather knowledge, because knowledge truly is power. as long as you put action behind the knowledge. So what I do is I gather the knowledge, and then I start to apply action behind it. So I leverage other people's experience, and really that's what it boils down to, because all of the education I'm grabbing is coming from someone else, whether it's off the internet, whether it's off of a social media platform, whether it's at a mastermind, a podcast, a book that I've read, a YouTube channel, whatever the case is, I'm leveraging someone else's experience to educate myself to mitigate risk. But I am willing to put it all on the line. And the reason I'm willing to put it all on the line is because I'm trying to get big lifts, not, $50 lifts, not $5,000 lifts, not $10,000 lifts. I'm looking for $100,000 plus lifts. Now, that might be a $10,000 gain on a single family residence, but I'm looking to do multiples of transactions if that's going to be the case. So when I go and I put my money, and it's risky in the sense that most people would think is risky, it's because I know that I will do whatever it takes tomorrow to make up any losses. I also understand that the billionaires and the millionaires have lost a lot of money. The difference is they have been able to gain more than they lost. Now, you want to mitigate the losses, but in reality, as you are moving up and you're in growth mode, you are throwing a ton of stuff out there. Not every one of them is going to stick. But the more you educate yourself and surround yourself with people that have already walked the journey before you, the more you're going to earn and the less you are going to lose. But if you sit back constantly in fear that you're going to lose something, there's two things that I think of. First is you need to work on self-development, because you do not have enough confidence in yourself that you are willing to do whatever it fucking takes to get out there and to make it happen. So that's number one. Number two is you have not educated yourself enough. Because if you had a somewhat of a blueprint to explain to you of the unknowns that you have, then you would start to be braver to go and take the risk. Because the reality is the unknowns, is the things that we think could happen. But as soon as we start to pepper ourselves with the things that we know will happen, when the results of our actions, at that point, we become more confident. At that point, we will begin to move forward and take action, and we will start to see the results that we want to see. But there's a flip side, and that's a preservation mode. These individuals have already created a massive amount of wealth, and they don't need to see such big leaps and lifts. So they're a little safer. They're not in that building phase. They've already established an amount of wealth that they're very comfortable with. So at this point, they take the turtles mentality more slow and steady, slow and steady. See, I'm over here, the rabbit, sprinting like hell, because I'm sitting here trying to make up ground that I lost in my 20s, to be honest. And I'm over here saying I've not got to that threshold yet that I feel like I've built my own economy. So I'm over here trying to do a little bit of everything and having to remind myself to focus and to pull back. And that is one of the cons of being in the growth mode, because every shiny object seems like an opportunity. And we have to make sure that we don't jump on every opportunity, because you can't master every opportunity. And this is a very hard concept, and you'll see early new entrepreneurs that start their entrepreneurial path do this. They'll start walking down. I've done it myself, and every single other entrepreneur I would venture to imagine has done the same thing as well, because I have heard it mentioned from people that's already gotten past that phase, and I see it happening in so many other entrepreneurs that are just starting out. They get an idea, they start to execute on it, they're having some success, and then they start to see something else with success. And now they're like, I want to go do that as well. And so they venture away. And I did this. I did this with my disaster cleanup company. And my disaster cleanup company was doing well, and we were over doubling our revenue every single year. Profit margins stayed well as we were doubling. So the profits were growing in double as we were doubling revenue. And then all of a sudden, I got wind that real estate is where all of this wealth was being created. And do I regret going after real estate? Absolutely not. That's not what I'm saying. But what I am saying is my cleaning disaster cleanup company, it took a hit. It took a minute for me to see that hit in the finances. But over a year's worth of time being unplugged, like coming into the office, being there, but not focused on the growth, not focused on the efficiency, not being present. I was there in person, but I wasn't present in the business to where everybody was like, oh, here's, they would come and ask me questions, but I wasn't present like I was before because I was focused on real estate. I was focused on educating myself, getting in those rooms, on the webinars, actually doing some action so that I could create some momentum to start acquiring my first real estate deal. And before I knew it, I saw revenue start to decrease instead of double. Matter of fact, I just saw that it didn't double and it didn't worry me too much. And then all of a sudden this year, first quarter, I saw it decrease in a big way to where it caught my attention. And I said, whoa, I've got to plug back in. And that's what happens is when you're in growth mode, opportunity is around every corner. Because when you start to do self-development and you start getting your mind right, you realize money is not hard to find. Money follows action. And you start seeing possibilities to help create wealth around every turn. Every time I went to mastermind, I heard where someone else is being successful at something. And so I realized that I got to pull back and really start to understand the word no. Because when you first start out, yes is your best friend. Because you need to learn how to say yes and start taking that action. But then as you begin to move down the journey of growth, you have to learn the word no. Because you'll get distracted. And it takes a lot to become a master at something. And the masters are the one that get paid high rates. So here's my advice. Find something that's going to create good revenue, that's going to pay you over $100 an hour in gross profits for every hour spent. And when you find that, any type of service you can do that in, okay? Any type of service you can do that in. As long as you can create enough value, you will be able to do that. And I feel like that is extremely easy in a service-based business. Once you find that, then start to develop and scale that business by building a team. And then this is your fast money that you can take and now start to deploy into cash flowing assets or in assets general. My thing is, in the beginning, you want a cash flowing asset until you build wealth. Then at that point, you can have more of an appreciation play. Cash flow is just a simple fact that after all expenses, the money left over is called your cash flow. And you want enough cushion so that if something happens, that cash flow will be able to support you, will be able to cover whatever that extra expense might be. And we so often will get distracted from our primary income because we look over here and say, well, this is more income. This is better income. But what you're seeing is someone that's already walked a path and they're further than you are. And maybe what you're seeing their success in, they have been in for 5 years, for 10 years, for 15 years doing this. That's why they've got this massive success. It took them a moment to build the momentum up so that they could run forward. So if you're a landscaper, focus on getting your cash flow high as the landscaper. If you are a gutter cleaner, if you're hanging Christmas lights, if you're a window washer, if you're a carpet cleaner, if you're a disaster cleanup company, if you are, if you've got an asphalt paving business, if you've got a construction business, whatever it is, focus on creating more cash flow there. And as that cash flow is in surplus, dump it into cash flowing investments. Partner. You don't have to learn it like I did. Partner with someone. You can reach out to me. I would be more than happy to bring you on as a private money investor and figure out a way so that you have ownership in an asset if you're kicking cash flow off. This is how great wealth is created. It's by teams. But many times we allow ourselves of scarcity and greed to stop us from creating a team because we look at what we're giving away instead of what we're gaining. And that is the mentality of scarcity. But if you would have an abundance mentality and you look at what you're gaining instead of giving away, then you're going to be way more successful. Because what happens is people will miss an opportunity because they look at the interest rate that they're having to pay for money. This happens in real estate. They'll sit there and need some hard money. They'll need $100,000 to close this deal. And this $100,000 hard money lender might sit here and say, okay, I'm going to charge you $8,000 on this $100,000 to have it for 60 days. That's pretty stout. But the upside of this is a $30,000 gain. So instead of saying, man, there's no way I'm going to pay you $8,000 out of this 30, they're losing $22,000 because they're focused on the $8,000 they're having to pay out because they're thinking they could get it somewhere else cheaper. And in reality, they can't find it anywhere else cheaper. And then they miss the whole opportunity. That's called opportunity cost because they were focused on the wrong thing. They were focused in thinking in a scarcity mindset. So in this growth stage, stay focused. In this growth stage, put all of your action behind creating more cash flow revenue in the industry stream that you are currently at. If you're not making $100 an hour gross revenue, then reconsider. So what I mean is if you're stuck at like $15 an hour or something like that, then no, that's going to be very difficult to get it high enough for your lifestyle, for you to live comfortably and also have extra cash to be able to dump into assets. Because here's the formula. Whatever your lifestyle is right now, take an assessment of what your life is right now and what it's costing you to live that life. Any fluff that you can take off with still having some fun, any fluff that you can take off, remove that fluff from that lifestyle expense. Now, this is what you've got to create as income so that you can live. And everything above that threshold is going to be the money that you invest in cash flowing assets. And this is going to take several years because it's going to take a decade to start seeing legacy wealth. But it starts to compound very rapidly when you begin to start dumping into assets. This is where the legacy wealth takes place. But you've got to get started, which means you've got to have the cash flow higher than your current living expense. So either reduce your lifestyle or increase your revenue, your cash flow. And I say increase your cash flow. So figure out what is going to allow you to do that. Again, anything in the service and trades, it's not complicated. You can take almost a 2 to 5 day course and learn almost any trade unless you get into something like electrical, HVAC, plumbing, something more high end. But these service trades, these service businesses, these are the ones that you can learn in 2 to 5 days to have the basics to be able to go out there and start creating revenue now. And once you've got that cash flow and you start building your investments, in 5 years from now, I promise you will see a dramatic change in your net worth. But 10 years from now, you will have substantial net worth and you will be able to start seeing legacy wealth behind your name on the spreadsheets. But now, what about the flip side on the preservation? I was having a conversation with Kevin Marin and Mike Fallett before we did a live in our Blue Collar Millionaire Facebook group. And he ghostwrites books for entrepreneurs. And I said, man, you see a lot of entrepreneurs and you see a lot of people with, huge wealth. I mean, you've had conversations with billionaires all the way down to the first million of a millionaire. And tell me, where do you see people to where they kind of stop chasing money And it seems like they're focused more on contribution at that point. And Kevin and Mike kind of felt like, based off their experience, it was probably somewhere around that 25 million mark. And I'm not there yet. I'm still chasing money. Yes, I try to be focused on bringing value to the marketplace and let money follow. But my efforts are all about creating more money. Everything that I do is based off of, will this create me more money? Because I understand that when I've got freedom, financial freedom, that I can contribute to more than just myself. And this is where most people are disillusioned, because they feel like money is bad and it's the root of all evil, because we've been taught this ridiculous money blueprint that is not even a money blueprint. It's a broke blueprint. It takes money to make money. Money doesn't grow on trees. We've been told all of this stuff. Hard work is what it takes to produce money. And the reality of it is we've been taught all wrong. And these individuals that are on the preservation side, they don't look for large leaps. They're looking to put their money into assets because they live off their balance sheet at this point. And these assets are building net worth. And there's a reason the government has tax advantages for three things, which is businesses, it is real estate, and it is charities. Those are your three areas that you can find your tax advantages in. Because they understand that businesses create jobs. They understand that real estate allows housing and reduces the homelessness. And they understand that charities take the burden of the poor off of the government. This is why you shouldn't despise the rich, and you should aspire to be more like them, because they are the number one givers to the charities that help the underprivileged. Who cares if they've got 4 yachts and 50 mansions? They are still the ones that are giving to the charities that's helping the underprivileged. Because the rest of us have not taken enough action and have not educated ourselves enough around financial literacy to be able to be in the same position as them. And we've got this internal thermostat that we've allowed to keep us, when we do make money, it reduces back down, because we feel like money is bad because that's what we've been taught. We feel like we can't focus on money because that's awful. We feel like to go chase money that we have to deprive our family and not be present. Let me tell you, you need to focus on being a winner before you focus on anything else, because then at that point, you will be able to be a winner to those other areas, like your spouse, your children, your church, your friends and family. Be a winner. Be an inspiration. Be something that people will watch and want to follow and be inspired by. Be someone that is able to give out instead of asking for a handout. But we've been taught from broke folks the wrong philosophies, the wrong mentality. And we've got to start educating ourselves and being taught by the ones that actually have enough to give out. So my question to you is, are you on the growth mode or are you on the preservation mode? So the guy that was sitting at my table said, I'm over here buying triple net commercial assets, retail strips. And he said, it's a 4 or 5 cap. And I thought this was extremely important, because it reminded me it doesn't matter what level you're at. We all pretty much have the same challenges at every level. There's just more zeros behind them, or less zeros behind them. And I realized that we all struggle with our mindset, deal flow, and cash. So there's many times that people will say, I don't have enough deals. And then the other side of the scale is, I don't have enough cash to take down the deals. And every market cycle creates one heavier than the other. So right now, the market cycle has been, there's not enough deals to buy, and the market's been flooded with cash. Now we'll start to see that in the next 5 years. It'll be flipped. There'll be plenty of deals and not enough cash because everybody's going to feel a pullback in the economy, and they're going to want to hold on to their cash because that gives more security in that they have created their own economy and they're not dependent on the current economy that we live in, if that makes sense to you. So he said, I've got these deals and we're tackling them, and it's a 4 or 5 cap, which is what I'm looking for. That doesn't bother me at all. He said, because I look at my debt pay down every month and how quickly my net worth is being increased. And he was like, he said, but I run out of cash, my down payment cash. He said, I've only got so much. And this guy was a multimillionaire, by the way, very, very successful. Started out in businesses with the fast money and then transferred over to the assets that cash flowed. And now not even high cash flowing assets, because 4 or 5 cap, if you don't know what a cap rate is, it's just your return on your money if you paid cash for whatever you were buying. So if you look at your income, so your net operating income, that money, that what we call cash flow, that cash flow money, the profits, the net profits, you take that and you divide it by the total asset amount. And then at that point, you've got your cap rate. So if I had $12,000 in profit left over at the end of the year from all my operating expenses, and I spent $100,000, that's going to be a 12 cap. Because if you divide 100,000 into the 12,000, it's 0.12, move the decimal 2 places like you were taught in school, and make a percentage sign, and now you got a 12%. That's your 12% cap rate. So he said, I'm running out of down payment. So us at the table said, why aren't you raising money? And he said, nobody's interested in a 4 and 5 cap. And I thought this was very interesting when I heard this. One of the guys that was like 22 at the table, very successful, couple of million a year coming in, net profits. He's successful in the e-com store space. And he said, dude, you're talking about 2 different mindsets. Why don't you open a fund? He said, you're talking about the people like us at this table that are trying to grow their money. But what about the ones that have already grown it and they just want to preserve it? They want a safe asset to put their money in. Those are the people that you're looking for. They like real estate over stocks, and they don't mind a lower return on their money because it's safe. It's something that they understand. And instantly, it was like, bam. We all have the same block. It was a mindset thing for him. He's got deal flow. He was short on cash, and his mindset was limiting him to get out of his own way so that he could keep growing his asset class. Because the reality is he could sit there and give away all of the return if he wanted to, all of those net profits, because of the equity play that he's looking at in his real estate. So the reason I tell you this story is it doesn't matter what level you're at. You might say, well, I need cash. The millionaire, the multimillionaire over here said the exact same thing, because he's playing the game, and there's only so fast you can play if you're using all of your own resources. But as soon as you begin to join up with the team, your resources expand, and now you're able to scale at a faster rate. So if there's any actionable item that I can leave you with, it is to leverage other people and to increase your cash flow, the fast money. And third, take the extra that's over your lifestyle expense and dump into cash flowing assets. Until next time, let's live in success. Find me on Facebook, find me on Instagram, find me on LinkedIn, Chris Garrison, and check us out on Blue Collar Millionaire, where we talk about everything business, and Bigger Vision Facebook group, where we discuss mindset, business, and investing. Let's grow together.
This is thepodcastfactory.com.